I'm here to share with you about the market updates in the past week. So, the Wall Street reaction to tech initial public offerings has been relatively flat, and Silicon Valley valuations are questionable. Last week's IPO results were not encouraging. First, it was chip designer ARM that made its debut last Thursday, followed by grocery distribution company Instacart and Klaviyo, a cloud software provider. And they represent three distinct sectors of the tech industry, but the Wall Street has shown a consistent trend in its lack of reaction to their IPOs. Investors who buy at an IPO price can make money if they sell immediately. Almost all other companies is in the red. This is acceptable if a company aims to go to public and create liquidity opportunities for employees and early investors, but has little appeal to most companies preparing to go public, especially those have enough money to their balance sheet to keep going private. Let's take a look at our. So as we can see that shares of ARM controlled by Japan's SoftBank jumped 25% to close at $63.59. And then since then the stock has fallen daily, closing Thursday at 52.16, just above the $51 IPO price. And then let's take a look at Instacart. Instacart immediately rose 40% after the sale at $30, but at the end of the first day, the stock rose just 12%. And the next day, the gains were almost entirely erased. The stock was once up 1.8% on Thursday to close at 30.65. And then let's take a look at Klaviyo. So Klaviyo rose 23% on its first day of trading on Wednesday, and before selling out throughout the day to close at 32.76, just 9% above the IPO price. And on Thursday, it is up to 0.9% to 33.72. And we can see that none of these companies anticipated a big rise. Which is contrasting to a few years ago when in 2020 and 2021, the IPO companies would expect a bigger gain from their IPO, and that the bubbles was really high. That's all we have for today. Thank you for listening. Don't forget to subscribe and see you next episode.